My name is Mike Ippolito. I'm a co-founder at Blockworks Group. I'm going to be the moderator for this panel. I'd like to just start things off by going down the row here. Could you guys all introduce yourselves and tell us a little bit about what you do?
My name is Freeman. I work for a cybersecurity consulting company that does risk assessments, code analysis, penetration testing, ongoing monitoring, and I'm here because I've looked at probably more than half of the custodial solutions in this space, and I've found everything from gaps to successes to really understand that if you're a consumer, why each platform is either good or bad for what your business does in blockchain or DLT.
My name is Ari Smith. I'm the Chief Technology Officer at FinCross International. We're an investment banking, securities, and investment management firm specializing in developing DLT and artificially intelligent fintech solutions for the financial market.
I'm Pamely. I'm the founder and CEO of Paladin Trust. Paladin is a custodial shop who specializes really in hedging and pegging our custody of our clients to the dollar if they so choose. And most recently, for the past 9 months, have been working with the state of Wyoming to not only pass the legislation, but now to become the first official crypto custody full-on bank in the United States.
Yeah.
A lot of work.
I'm Kinsey Cronin. I'm the Vice President of Business Development at Prime Trust, which is a regulated financial institution that is a custodian of crypto and traditional assets. And we specialize in APIs that allow us to become the back-end infrastructure for exchanges and stable coins and other businesses in the space to allow them to have their customers creating accounts and managing funds through our white label solutions.
Excellent. Let's just kind of start off at a high level and talk about what are some of the largest problems that custodians, having trusted custodians, is solving in this space right now?
I think they're being relied on to be some type of secure storage, but the definition of security is very, very wide and deep in this space, and I think people inherently think things are secure because of this blockchain technology. And what a custodian inherently is supposed to do is help you solve your regulatory needs by holding your assets. I think that's probably a good starting point for that.
Okay.
Yeah. I think really custodians are a shift of liability, right? So
Yep.
We're really all here not because we see a big need in the affinity or early user space. This is not to hold 5 Bitcoin. This is we are building the pipeline and the rails and the infrastructure for the very large institutional holders that have been waiting for the systems to be in place for them to actually start to execute. So what we're really geared toward is trying to get not just the regulatory approvals, but the systems built so that we can get the levels of insurance that are needed to get the really big dollars into the space.
Got it. Can you be a little bit more concrete about why that shift in liability is necessary, and what are some of those institutional kind of larger players that this is crucially important for?
Sure. I mean, if you are a large manager, so over $125 million, I think is the amount in the United States, you must use a qualified custodian. The law is written so that if you're holding and managing people's money, you can't just sew it into your mattress. You actually have to put it in a qualified custodian. Now, the challenge is that the term qualified custodian is defined in 3 different federal laws, and it's defined differently in each law. Depends on what you're talking about. So what the SEC has said is, if you're a qualified custodian, you got to meet all 3, as per the SEC. Now, you don't need that for state law. You don't need that to hold gold. You don't need that depending on the state, depending on what you're holding. But if you want to hold and move and clear securities and money for people, you have to be the SEC's definition of a qualified custodian, okay? So now, if you're managing a big fund, if you're PIMCO, and you want to raise a $4 to $8 billion fund to invest in STOs or cryptocurrencies, there isn't anyone right now in the United States that can legally hold that. Until we complete the bank charter, literally, there's nobody there. So I believe, and that's PIMCO's requirement, that's a federal requirement. Now on top of that, if you're a fund manager and you run CalPERS money, it's probably written within your mandate that not only do you need to use a qualified custodian, but that custodian needs to have a certain amount of insurance. And there are other things that get written into those mandates all the time. So they're sitting back waiting, saying, guys, go ahead, get yourselves there. We look nothing like real custodians or traditional financial custodians. They are far more mature. They have far better security, as you were already alluding to. They have bigger insurance levels. So we have to educate the insurance industry. We have to educate the fund managers. We have to educate a lot of people. We have a lot to build to get there.
Sure. I guess my question there would be, so I think a lot of us in the room probably hear these things like, well, the SEC mandates, right, that you need to be a qualified custodian, but then, we can't actually meet these regulations. I know all of you speak to the SEC or, have an understanding of what their perspective is on this. Could you talk to a little bit about what some of your conversations with them have looked like? To kind of give the other side of the argument.
Yeah, I will. So our conversations with them were, what's missing? Tell us why no one in the U.S. meets this. And they literally just showed us the 3 acts, the 30, the 33, and the 40 Act, and said, okay, you got to meet all 3. And ultimately what it points to is you need to have a banking license, right, to meet all of those. So you say, okay, why? Because the problem is, in essence, dissolving an entity, so dissolving a trust, if you're holding all of those assets in a commingled fashion and the trust goes bankrupt, there's not enough protection for the folks whose accounts are there. So it's a legal term called bailment. How are the assets held? Are they separate or are they commingled? And then, within the state that's chartering the bank, we had to rewrite the UCC laws, so the Uniform Commercial Code, to actually redo what happens in the dissolution or the bankruptcy of this type of bank to meet the SEC's requirements. So what the SEC wants to see is, in essence, it's a bank. The accounts are separate, the assets are held separately, and if you go under, those assets are still going to be there. And there wasn't a provider until Paladin just helped build this law that actually met those requirements.
Understood. Anything to add? Anyone else? Or no?
I can't really speak to the SEC, but I could tell you in regards to what I've seen from what Bermuda's trying to do in regards to the stack and what they're looking to see from certain places. And also I could speak a lot to NYDFS and what the BIT license requires. And a lot of the time what people are looking for now is very prescriptive measures on how you're managing private keys, how you're generating them, destroying them, a process for handling incident response, which is essentially critical for any financial institution. And it's becoming very, very prescriptive, requiring people to have processes and procedures in place that don't necessarily say, hey, just because I'm SOC 2 compliant doesn't mean, or SOC 2 Type 2 says, hey, I have great posture as it pertains to BMA or NYDFS. And I can't really speak to SEC, but most of these regulations are looking for hyper-prescriptive things that people don't necessarily have the experience for, or to get this done, or more importantly, the time and the efficiency to do it.
One thing I'll point out, after working in this space, starting in crowdfunding with the Jobs Act laws, for several years, is that in all of my dealings relating to the SEC, when there is a gray area, when there is not clear definition, one thing that's really important is that you don't take that and say, oh, okay, well then we'll do whatever we want. The SEC is really into the idea of the spirit of the law. So that's a phrase I always keep in mind. So you take a look at the existing laws and figure out, what is the spirit of this? Why is it that there are different laws that define qualified custodian different ways depending on what you're doing or where you are? Why is it that certain aspects are clearly outlined and certain aren't? And you can go back into traditional securities law, and just because it doesn't have a token attached to it doesn't mean that those laws aren't there for a reason, and that reason typically is to protect the investors. So you can take a look at it and you can do your very best. And so it doesn't mean you have to stop what you're doing. You can do your very best and follow the spirit of the law. And I've seen a lot of businesses end up having conversations with the SEC, finding out that they need to tweak things, they need to move things. It doesn't really stop them. It just, as long as you are consistently paying attention and trying, that goes a really long way. When you decide that you don't care what they think and you're gonna do whatever you want and you're going to grow too big for them to stop you, that's where you're probably going to end up with major fines or jail time.
Let me just make a comment on that. Completely concur with what you're saying. In fact, as somebody who doesn't give a damn about the SEC, I build the tech, so all this other stuff is
Are we
just gibberish
recording
to
this,
me.
or?
But like, I can tell you that from where I sit, the real problem is that the government, or there's no like regulatory standards body that says this is how you must do things. And the industry, I'll use that term very generically, has done a complete crap job of saying this is how it has to be done. So when I implement systems, I have to build systems in ways that are, like sometimes it has to be very loosely coupled, which is a good architecture to use in this environment anyway for building these type of systems. But you have to build very abstract, generic modules because the rules and guidelines are subject to change. And especially if you're like, FinCross, we're building like cutting edge AI. You can't do that with generalized systems. You have to be very tightly constrained. The domain has to be really well understood. And so I ultimately think that the deficiency is on our side because the government's kind of incompetent at defining regulations, but they're good at adopting regulations once the industry is sort of coalesced around a certain set of standards. At least in technology, that's always been the way it works. And so I look at things and say, okay, what are the biggest problems I face? You have, gosh, there's so much. Like people don't even know what to ask for a custodian. They don't know asking questions like, what is your liquidity? Like, how quickly can I get my funds in or out? What is the distribution of my assets? How are they managed? Are they pooled? Are they segregated? These are all things that have to be digitized. They have to be, we have to create computational components that manage these workflow items. So if they're abstractly or qualitatively defined, it's useless. And so, the list goes on and on. You have to look at the jurisdiction that your regulatory components and your compliance aspects are governed by. You have to look at the executive leadership, the experience of your team. You have to, of course, look at the specific regulatory and compliance components, the cost of solutions. Like, these are questions customers don't even know what to ask because we're not telling them this is what you should be asking us. We're just hoping that they will figure it out, and as a result, every customer who comes to talk about it doesn't know what they're saying, and you end up with in a completely nonsensical conversation, so it's inefficient. There's no workflow, and if there's no workflow, you can't automate, and if you can't automate, then everything has to be done manually. And I'm talking about from the bottom of the stack to top, the engineering, all the way to the business processing, to the executive leadership. There's a systemic problem that I see from an engineering point of view that, of course, it's good to talk about the SEC and stuff like that, but there's fundamental problems that people like me are facing because all of you can't figure out how to get the government to standardize on things. I'm just
But he's not accusing you.
Make all of you my enemy. You as a general, people in this fintech industry, people need to tell whatever regulatory bodies, this is how things have to be done. In fact, that's one of the founding principles behind FinCross, was to try to wrangle this nonsense into sort of a clear set of guidelines and to try to establish those guidelines and to build systems that were specifically designed to provide the capabilities that we know people need even if they don't know it.
But here's the challenge that we had, and I learned a lot about writing a bill because I'd never written a bill before or gotten it through anything. But the people who write the bills have no idea what blockchain is or how to even hold or move a token, right? So they'll write it the way they think it happens, and it's not until later that an actual, custodian comes in that says, that's actually not how we do it. So to your point, you kind of have to operate before the law is written so that you know how it gets done. You sort of create your work processes and your workflow, and you say, well, that's actually the safest way to do it. So there's all this logic and work that has to go into the procedure before we can even say to the lawmakers, now we have to make a law here. Because otherwise, they'll just write it and they'll go, well, custodians, you know what you're going to do? When you print out your mnemonic codes, you need to then send them to the, and you're like, we don't send them anywhere. But they don't know that. They don't get the procedure or the workflow yet. So it's a really weird chicken and egg of actually explaining to the lawmakers. And I had to sit there and write, like, no, This is actually how it works. Don't put that into the law, or don't commit to that in the law, because it's going to change,
But the
and we don't
problem
know
is
how.
We have to commit to it. We have to
I
spend
know.
money to commit to it in
I know.
code,
It's the
and then
chicken
hope
and this
that the laws
egg.
don't change, and they will. So then you end up dumping code that you spent time and money building on just the hope. Because if you don't build anything, then you end up with nothing.
But
So it's a
they're-
very wasteful process.
I know, and they're looking to us to explain. It's crazy, right? It's this weird chicken and egg. And then they're looking to us to educate them. So kind of to your point, you sort of operate, and then you say, here's the best way to do it. Write it like that.
And
I
you
was
just have to
just
hope that
laughing.
people that don't understand what you give them will implement what you
Yeah,
give them.
exactly.
Well, Aria's doing a really good job of just representing all engineers faced with the gray area. I think it's really perfect. And that's pretty much the process right now is the engineers are pulling their hair out. They have to dump code they already wrote because every day their lawyers come back in and say, oh, actually do it a little bit like this or do it a little bit like that. We heard a rumor. And that's kind of the process we're in right now. And that's just sort of, the jobs that we love doing.
It's not just engineers and lawyers, it's any regulator or someone who is interpreting an old law that does not reflect this space. And that's the biggest issue, is there's the lack, I don't want to say lack of intelligence, but the lack of expertise in this area from people who are making these decisions has been so slow and so slow to understand and adapt. And I think when it comes to the technical understanding of what has to be done from the back end,
They have no idea.
they don't know how to get the people in to look at it. And that's a general deficiency across the board in this entire space. If we look at how the U.S. has moved thus far in regards to creating a framework and adopting a framework, it's been what is everyone else doing first and then reacting, which is a huge, huge issue that everyone faces.
But I would urge everyone here to get involved with like the Digital Chamber or any of these other groups, because those grassroots organizations, we're part of the Digital Chamber, and DACA and the Wyoming Blockchain Coalition, all these types of groups, we get the draft laws, ahead of time, and they ask for feedback. And no, I feel like I'm the only one that reads these things. Nobody else is reading them and saying, hey, by the way, you kind of wrote this backwards. That's not how it works. I feel like I'm the only one that raises my hand and actually reads this stuff to make sure that the laws work for us. So they're trying to rewrite all the laws, and they post them, and nobody seems to comment. So I urge everyone here to get involved in actually reading those laws.
So what's the way forward? How do we as an industry coalesce around a certain set of acceptable standards and try to get that translated into legislation in an effective way? Is there a solution to this? Or?
I recommend these organizations. There's several of them. We've had great success with that. Obviously, us being involved in Wyoming had this ultimate benefit of us writing the law. Well, that's incredible. When do you get to do that? So you just have to be there. You have to be in front of the legislators. They want to learn. They want to know. Pick your state or pick your trade organization and read their policy reports and get on the policy calls.
To piggyback off of that, and Ari and I were talking about this backstage, I think just general education of understanding what each aspect of this industry entails. Because I could speak from a technician standpoint. I work in cybersecurity, and everyone just automatically assumes that I'm a full-on developer through and through. And that is not the case. And when you look at from the granular aspect of that to someone who has to deal with the legalities of this, there are so many moving parts of what a custodian is and what needs to be done. And we then apply that to this emerging space that has so many rapid changes, just general education. I think, piggyback off what Pam said, generally getting involved with your local government agency. I know that New York kind of tries to look for some questions. I don't mean helping necessarily the government in that way, but educating them, because she is right that they're looking to us to kind of push this forward.
I have to, and I want to defend the government just a little bit here too. I think, in this industry, there's a lot of like, hey, they don't know what they're doing. They lack education or interest or effort. But I think actually one thing that's really important, especially when you're talking about like, the really big orgs like the SEC, they've got experts that are working on this. They're asking, they're communicating. We should be stepping forward as much as we can because they don't know us if we don't say, hey, I'm an expert in this. But I also think we have to remember that they're not startups. They're not going to pivot overnight. They're not going to make a decision and then, have everybody change their job and do a new thing. they're going to be very careful about what they say. So they're thinking a lot before they ever put anything into writing, anything into law, make any kind of statement. That's why we get a lot of vagueness. I don't think it reflects a lack of understanding or a lack of like intelligence from any of these groups. I really think that it reflects a deep understanding of the need to be cautious, and they're considering how what we're doing is applying in 1,000 different ways that we're not thinking about at all. We don't wonder really how this custodian decision might affect, like, you know, what ends up on a kid's lunch plate. Could that affect it? If you're working in government, you're thinking about that. So I just want to sort of throw that out there too, that we have to expect that it's going to require some amount of patience and back and forth.
Wait, can I just make a comment about that? First of all, you work for the government?
No.
Okay,
This is a crypto conference. You can't defend the government.
all right. No.
I'm not sure if you've been to one of these before.
Big organizations of all shapes and sizes suck. So here's the thing. I've dealt with the government. At FinCross, we're trying to establish working groups. This is how like technology gets pushed forward when you don't have a specific, set of guidelines. You establish working groups that consist of big companies, startup companies, mid-tier, and government representatives. And I've been on a lot of those through the last 20-something years. I can tell you that with all due respect, I do think they are incompetent in general. You aren't getting the best and the brightest in these working groups, because it's like nobody from government wants to participate. All the companies, they're excited about it because they know it's leading edge technology. It's a bureaucrat that doesn't know anything about what you're talking about, and yet is the most important person, because that's the person that's making the decision about what they're going to take back and actually codify. And I have only seen it work well one time, when it was related to WC, like the W3 libraries for like the Web Digest libraries. But it's 20 years, I've only seen it work well once, and it has always been because of a stopgap in terms of the information. Now, I don't think that's the same. I think ignorance is not stupidity. I think ultimately it comes back to what I was saying before. I don't think it's the government's fault that those people don't know. I think it's our fault that we aren't providing aggressive educational outreach, and it should be offered for free. And I'm saying we, I mean whoever we is, but the industry needs to take leadership, and that's what happens in other industries. I think that the fintech industry has been garbage about educating the government and citizens in general about the opportunities that we can bring to them, because the industry, as people like traditional, like neurotypicals or citizens think of it, like, okay, some banking services, what's a custodian? Is that a guy who like cleans up? They don't know these words. And if the general layperson doesn't know those words, they're not going to be putting any pressure on their congresspeople to change anything. And if there's no pressure, they're not going to care what we're saying. So we have to educate from the ground up and at the top. But you have to kind of like meet in the middle. And that's when I've at least seen it work effectively, to like where there's an effective collaboration. Without that, you just talk, things move slowly, and ultimately people just build a bunch of like completely like segmented technology solutions that kind of merge into some crappy solution at the end, where you end up with a highly suboptimal end product that was the collaboration between a bunch of warring parties that had to settle on like the lowest common denominator of garbage tech. And a lot of the tech we're using today is the result of that kind of thing. I think in fintech it's particularly dangerous to take that approach, because it's so fundamental to every aspect of life.
Let me ask you a question. Did you have a different experience with the government of Mauritius, and is that why FinCross is located there? And are they just smarter than all other governments because it's Mauritius?
Let's see how to answer that politically correctly and keep my job. So Mauritius has been forward-looking. That doesn't mean that they necessarily have greater knowledge about technologies, but as a smaller, I'll call it an island nation, they have a lot more flexibility to establish regulations quickly. But that doesn't mean the experience has been any different. They just sort of scaled down. We still have to do a lot of education, and ultimately I have to there has to be a physical presence there. You can't do things remotely because things just don't move quickly. The whole finance industry, if it's not like the people in this room, I'm sure respond very quickly. Send somebody a text, hey, did you get this new library? Did you try integrating this API with the system? You're going to hear back in 30 minutes. If you don't hear back in 8 hours, you think that the person's a jackass, right? Finance, I'll wait 2 weeks for a response if I'm trying to get like some API for like that deals with like regulatory compliance. If it had to come from the government, that's always the stopgap. And I don't think that's unique to Mauritius. To their credit, they've attempted to respond very well, but it's just not in the DNA of people in government working with finance to respond quickly. And again, I think we have to impose upon them or impress upon them the idea that rapid response is the new model for how things have to be done. It used to make sense to move slowly because if you wanted to modify anything in finance, you'd have to like replace operational support system and business support systems where one mistake could topple your entire monolithic application and potentially cost you countless dollars in just minutes of time. Well, now systems are designed in a much more flexible, loosely coupled way so that you can re-engineer one part without changing another. And that way of developing needs to be the mindset that's adopted by people on the government side as it relates to finance. But it hasn't happened yet, and there's reasons for that have nothing to do with government and everything to do with vested interests of large financial firms to keep things complicated for people like us in this room to get anything done.
Speed and government of Mauritius, to me, are not the two coupled words that I would ever think. Those don't
All
marry
right,
easily
government
for
of
me.
Mauritius
So
aside,
t-
let's
So tell me
change,
why.
change
Tell
topics
me
here.
why. Why would you domicile in Mauritius?
Because they have the most forward-looking, and again, I'm not a lawyer, but I can tell you from the technology stack, they have the most forward-looking and complete investment banking license for us to provide both fiat as well as digital asset products in a mixed bag, like in a completely whitelisted ecosystem. There is literally no other way that we could get ourselves licensed to provide the types of solutions that we're looking to bring to the market. That's it. If it had been done on the moon, I'd probably be on a spaceship up there right now. It's the only way to do it, to execute our business model is through, and now there are other places that are bringing this kind of regulation forward, but right now Mauritius is literally the only place that we can accomplish our goals.
But if you want to work in the U.S., talk to me.
Okay, let's change tax for a second. Let's say I'm a large asset manager, right? And I'm thinking about allocating towards this space. What are some of the considerations that they're going to go through for thinking through which custody solution that they're going to use?
I think if you were to ask me, I'm very adamant about the fact that you have to see whether or not a company has been either pen tested against or they have a process for vetting their code, and really what encryption looks like from the full stack. A lot of companies may have policies and procedures. They may rely on a SOC 2 Type 2 report as the end-all be-all. That's one very small aspect of all of this. And if you're going to be using a custodian, you have to vet out what risks are going to be with that custodian. Ask for a pen test. Ask them if someone has come in and tried to kick the doors down of their HSM or whatever solution they're using, because the second you give them your private keys and your wallet, you no longer have control. And as it pertains to cybersecurity and anything in security in general, it's always about, what do I have control over, because I am inherently giving allotting the risk to somebody else. And if you're going to do that, you have to do proper vetting that just doesn't look at IT audit controls and what their process is.
Yeah, just good point. Like, security is key. In fact, you even need to ask them, go like deeper. Like, do you do two-factor authentication? You have to, and these are questions that we should tell customers that they need to ask us. There's an incentive for us not to if we don't have all of those capabilities, but that's our own weakness as like an industry that we need to shore up. But we need to be asking questions about the authentication mechanisms. We need to be talking about, do they support like multi-party signatory facilities, everything from understanding like how assets are maintained at rest. Are assets commingled? Are they pooled? Are they segmented? What is the speed with which I can do transactions or get my funds cleared or move my funds out? Like, they have to ask a basic series of questions, and we have to tell them what those questions are. And I would say half of those questions at least need to focus on security.
And to piggyback off of that quickly, encryption is everything in this space, and I get that. I think you also need to start considering what data that you're giving over other than just private keys to the custodians, because everything should be encrypted at rest at some point in time, meaning that if someone were to access that's nefarious, they wouldn't be able to really access that information. It's critical, and a lot of people in the space aren't thinking about it from top to bottom. It's a huge part, and I couldn't agree more about multi-factor.
That's a great point, because especially if you are working with a qualified custodian, you should be, when you're opening your account and submitting your funds, you should be needing to provide a lot of personal information so that you can be processed through a Know Your Customer and anti-money laundering process. And that means that the organization you're working with has access to your private information beyond your keys. So you definitely want to make sure that the security is there.
As we built the system that we're working under today, we always realized that the technology is going to constantly be changing. And in custodianship, you're dealing with a natural tension between two things that don't fit well together: access and security, right? If you want to bury it in a mountain, terrific. You'll be super safe. You'll never get at it. You want hyper access for very, very frequent trading. You cannot have multiple signatures on a hyper trading account. So the architecture of the system has to be really thought through for the type of client that you're using, right? Almost sort of like a checking versus your savings account with a sweeping nature to it, because you don't want to have at risk your entire basket. But anything that's going to be accessed frequently, and we're now dealing with sort of your hyper trading, heavy trading hedge fund user, that's a real challenge. It's just naturally going to be a challenge. So the other thing I would ask to answer your question is insurance levels, who the insurance company is, if they're going to pay, if something goes wrong. Just getting actual full, like, oops, I lost the Bitcoin insurance is very different than getting regular liability insurance. So we're getting the insurance companies more up to speed on the things that you're discussing, which to them, they don't know, it blows their minds. Right, at all. So sometimes they're a proxy for how well your technology is built, but sometimes they're not. And then really it's the regulation. I mean, to your point, the SEC is there to make sure that people like us are thinking through all the problems. So number one, make sure your custodian is fully regulated.
Yeah.
The one thing I want to say is insurance is really finicky in anything that's digitally related, because as it pertains to actuaries being able to give you and create an algorithm that actually determines what your dollar amount risk is per downtime, whether it's losing an asset or your company being down, there's no real way of doing it that currently exists. And it's either you get small policy or large policy. And I think that's a problem because it's not super prescriptive.
Well, we don't have a loss history. They underwrite on loss history. There's not enough data. So we're going to be overpaying for a while.
Yeah.
There's also not a large enough pool. At least that's what they're saying. So there's another chicken and egg. We need more people to be paying into the system so that they can cover the cost of a loss.
Got it. Let's start even more basic with insurance, and we only have a couple of minutes here, and I want to be cognizant and give the audience some time to ask questions that they might have. But are all of the assets that are being custodied right now by the various different solutions providers, are those all insured right now?
You mean firms not represented on this panel? I have no idea.
Yeah.
Represented on
about
this panel,
us.
yes.
Oh,
Can you talk about that?
At Prime Trust, all of our cash, our US dollar, is all FDIC insured. Our crypto assets are partially insured, but they're not insured against hacking. If you want that insurance and your funds are at Prime Trust, you can buy it, but you're going to go through Aon or Lloyd's, and it's pretty expensive. It's about 1%.
Interesting.
Oh, we've seen it even higher than that. So for us, we have different solutions. If people say they sort of check the box, yes, I want insurance, we place it with a different type of technical product. They pay more for it. Still no takers on that every time we tell them the price tag.
Yeah,
So that's the fully insured solution. Otherwise, we've got standard insurance. And for our fiat holders in the new bank structure don't even need FDIC insurance because we can't loan the funds out. So the funds are there. They're sitting at the Fed.
Got it.
I can't really speak to like the legalities behind how. I know that we have some type of insurance mechanism that is industry leading, and my CEO could talk, or the CLO could talk that. What I will say is that something interesting that came up is a request came to me from our insurance provider to ask if there was ways that we could decrease their risk or decrease their risk exposure. And I presented them with an answer that I was surprised that they had accepted enthusiastically, which was this. Told them that I could build an AI that would identify patterns to detect fraud or malfeasance or just questionable transactions, and then I would give them access to the source. So, of course, with AI, the source doesn't really tell you much because the systems evolve, they're non-deterministic, so they train through countless iterations and multiple dimensions that we can only understand mathematically. But the fact that we can be completely transparent and show them that we have an overwatch system that is automated and that is non-deterministic, that is dynamically evolving and is improving itself as more transactions occur and as more data is fed to it, that has actually given us an opportunity to lower our insurance, I guess the premiums, like the cost that we end up paying.
Sure.
My question for you on that is, and not that I doubt your skill in any way, but did they do any vetting beyond asking that question?
Yeah, the way it worked was this. I can't go into detail about the
Yeah, of
company, but I'll just tell you just generally this is how it works. So, and this is not just applicable to what I'm talking about right now. It applies to something we discussed earlier that actually that I think you brought up, Pamela, was about the way that we can't just look at security from like sort of one vector. Well, AI is an important part of security analysis in terms of like doing, when you look at pen testing, that's like, okay, go in, trying to get into a system. But what happens on a day-to-day basis if somebody just starts acting in an unusual way? Can we detect that? Are those outliers? Is that variance, is that detectable as in some kind of computational way? And we can do that, and we can do it provably, even though there isn't a long-running history here. The data has there's an enormous amount of data that we can utilize, and because it's analogous for the insurance industry, I could tell them, give me your data, tell me what you have, and I will train out. You can sanitize it, you can anonymize the information, and as long as it's in the form, the data is sanitized and regularized and normalized in a form that I can train my systems on, I can train it in conformance with whatever their parameters are, and I can give them complete transparency in how it's done. And that was something that, first of all, nobody had actually discussed with them, and it's something that they found very amenable. In fact, they even wanted to talk, there was a conversation about partnering to build a module for the insurance. So insurance tech, fintech, it's all like, kind of, it ends up kind of merging into one
Well,
thing.
and it's funny you say that because that's one of the things that we've been trying to identify and go on is how do you actually quantify risk using the data that exists?
Wait, you said earlier that the insurance companies, that they don't, they have no way of doing this analysis, so you're always overpaying. That's not true. They can do the analysis. You're right that they don't, but they can. The data exists. I could tell you with a high degree of accuracy, precision, with like solid recall and F1 score, not going to whatever it means, but like I can tell you if the metrics and like the KPIs that matter from the perspective of a data scientist, we can do this analysis,
Correct.
but it hasn't been adopted or accepted by the insurance industry. Yeah.
Got it. Okay, I just want to open it up now.
There's a difference between custodying like a bond, like literally taking it and putting it in like a safety deposit box, and custodying it the way that you're envisioning it. Not until our bank is up and running under the new charter will we have an SEC, a fully SEC approved qualified custodian for the movement and settlement of security tokens. So it's coming about December. Call me then.
Well, I can tell you that we can provide that, but we have to walk you through it at this point because it's not something that we've been able to automate because there's different regulations that depend upon different circumstances, but our license does allow us to provide that capability.
Okay.
My question is like, how difficult is it for claiming the insurance, and how many cases have you dealt as a custodian till date?
None. I have no idea.
Yeah, it's pretty much always turned down because of cost. But we still have so many customers that are basically just going without it at the moment.
Like a loss claim? Is that what you're saying? We've never had a loss claim.
We haven't had that either.
I would assume it would be as much of a pain in the ass as any other claim you make to your insurance company for any other reason, but we've never experienced it.
All right.
I truly believe so. So what we did when we set out to write this
The
law...
question was, has Wyoming, just repeat it.
Oh.
Yeah.
Yeah, a golden goose. Well, I hope so. Boy, that'd be great. Has Wyoming created a golden goose? Let me answer it this way. What Wyoming set out to create was a new type of entity and charter that will solve two problems. Number one, the de-risking or de-banking that has systemically occurred with crypto-related companies throughout the United States, where the FDIC has placed such requirements, conservative requirements on banks that bank people in our industry, that it basically choked them out of the market, okay? And a lot of the folks here in the room have trouble getting bank accounts. So it solves that problem. But the second problem it solved was the SEC qualified custodian problem. So we went to the SEC and said, what does it take? What do you want us to change? They gave us a list. That's what got written into the law. So it's the first time. Is it a golden goose? God, I really hope so, because it was a lot of work and resources. We'll see. But come bank with us, this time next year, I'll let you know how much money we're making.
All right, that's all the time we have, guys. Thank you very much for listening.